What's up, y'all? Welcome back to the channel. Today we're going to be talking about what are ETFs, types of ETFs, why people invest, and just everything about ETFs in general. Before we get started, I just want to clarify that this is not financial advice. The opinions expressed here are solely my own and are for educational and entertainment purposes only. Investing involves risk. Past performance is no guarantee of future results. Please do your own research. So what actually is an ETF? ETF stands for Exchange Traded Fund, and that kind of leads into what it actually is. Firstly, it's a basket of assets. Think of it as similar to a mutual fund. It's a collection of assets, maybe stocks or bonds. But the main difference between an ETF and a mutual fund is it trades like a regular stock. So instead of getting priced once a day, it gets priced all day, constantly, like all other stocks. It trades and sells just like a regular stock, like Apple or Microsoft. I can buy and sell any day and has a specific share price, just like a regular stock. So what type of ETFs are out there? Firstly, there's sector or theme or factor ETFs. Think the 11 sectors of the S&P: industrials, utilities, real estate, healthcare, factors, value, growth, quality, momentum. Those are some of the things you can get or characterize an ETF with. Secondly, there's also bond ETFs. There's treasury ETFs, total bond market ETFs, bills, notes, bonds, you name it, durations of bonds. All those kind of ETFs are out there. Those are, and this kind of goes along with like the index aspect. Some ETFs are not index funds, but I would say most are. They track some sort of index, like the S&P 500 or Nasdaq 100, like QQQ. This could characterize like a security or a bond ETF or commodity, like an index. By tracking a sector, it could also be tracking an economy to track that sector, if that makes sense. There's also commodities, gold ETF, silver ETF. Those are really common ones. I know Spider Management offers some of those. And another way to characterize an ETF is the type of management it has. Is it a passively managed index fund, or is it more of like a hedge fund with a fund manager that is seeking to outperform the market specifically? With active management, typically your expense ratio is going to be much higher than a passive investment because they have to pay the people that are trying to outperform and trying to make the decisions of the fund themselves. But passive, that would usually be an index fund, like an S&P 500 fund with low cost. So what are the two main benefits of investing in ETFs? Firstly is liquidity. Very easy to buy, sell, trade, just like a regular stock. But if I want to buy 1,000 stocks, it's easier for me to buy, sell, and trade one ETF that tracks 1,000 stocks than it is for me to actually go in and buy 1,000 stocks individually. Again, more liquid than a mutual fund, and easier to trade. Secondly, is easy diversification. Like I just said, easier to buy one ETF than 1,000 stocks individually. Easier to trade, and you can buy instant diversification by buying one ETF, like a total market fund, or if you want to be diversified more specifically in a certain factor or sector. Like if I want to invest in semiconductor companies, I could buy a semiconductor ETF and have instant diversifications to dozens of semiconductor companies. They are very easily used and they can easily diversify your portfolio. There's everything you want to know about ETFs. Thank you so much for watching to the end. And as always, please feel free to correct me in the comments. Thank you so much.